For centuries, gold has been the symbol of wealth, stability, and power. It was the foundation of empires, the anchor of currencies, and the ultimate safe haven when everything else fell apart. But today, in the digital age, a new form of gold was born: Bitcoin. To its believers, Bitcoin was digital gold, a revolutionary idea that promised to free money from governments, inflation, and banks. It wasn't just a currency, it was a movement, a protest, a technological rebellion. But what happens when both of these safe havens start showing cracks? In the last few years, both gold and Bitcoin, two assets often seen as opposites yet strangely similar, have faced something unexpected: doubt. Investors who once saw them as unstoppable hedges against chaos are now asking the unthinkable. What if the pillars of financial safety are crumbling too? Let's rewind for a second. After the 2008 financial crisis, central banks around the world printed trillions of dollars to keep the system alive. The result was simple: money became cheaper and people looked for assets that couldn't be printed. Gold soared, Bitcoin was born, and both became symbols of resistance against inflation and central control. For over a decade, Bitcoin grew faster than any asset in history. It turned early adopters into millionaires and captured headlines with every price spike. Gold, meanwhile, kept its slow and steady rhythm, less exciting but always reliable. Yet as 2024 turned into 2025, something began to shift. Global inflation cooled, interest rates stayed high. The world's biggest economies started tightening, not printing. And suddenly both gold and Bitcoin faced a harsh question. Without chaos, without fear, what are they really worth? Gold prices began to stagnate. Bitcoin's wild swings lost their magic. And the narrative, the idea that both assets were unstoppable, started to fracture. But this isn't just about prices, it's about psychology. For decades, gold's power came not just from scarcity, but from belief. It was valuable because we all agreed it was. The same goes for Bitcoin. Only this time, belief was built on the internet. But belief, like markets, can change in an instant. When major economies like the US started exploring digital currencies, many began to wonder if the crypto dream was coming to an end. The idea of a decentralized future, one where Bitcoin would replace traditional money, started to feel distant. Governments fought back, regulations tightened, and confidence began to fade. At the same time, new generations of investors started asking, why hold gold when I can own stocks in companies that actually build something? Or, why hold Bitcoin if it doesn't yield anything? It's a brutal question, one that hits at the core of what gives these assets value. And while retail investors panic sold, institutions quietly repositioned. Hedge funds that once hyped Bitcoin began cutting exposure. Central banks slowed their gold purchases. The tide was turning. Still, markets are never about logic alone. They're about emotion, fear, greed, hope, and timing. When the US debt hit record highs and wars reignited in multiple regions, both assets saw sudden rebounds. People rushed back to the same places they once doubted. Because when the world shakes, humans instinctively run toward what feels ancient, untouchable, and safe. But here's the paradox. What if those safe havens are illusions themselves? For gold, the threat isn't just digital currencies, it's technology. Young investors don't romanticize bars of metal. They invest through screens in code. For Bitcoin, the threat isn't regulation, it's irrelevance. 1,000 new crypto projects claim to be faster, smarter, more useful. The dream of digital scarcity has become overcrowded. And behind all of this lies one simple truth. Belief can be created, but it can also be destroyed. When enough people stop believing that gold protects wealth or that Bitcoin is the future, the entire system built on trust begins to tremble. The markets have seen this before. From tulip mania to dot-com crashes, from housing bubbles to NFT collapses, every revolution eventually meets reality. Gold and Bitcoin might not be dying, but the myth of eternal safety might be. Because maybe, just maybe, what's happening isn't a collapse of assets, but a collapse of faith. A collapse of faith doesn't happen overnight. It starts quietly. A tweet here, a headline there, a sudden shift in tone from the experts who once sounded certain. Confidence doesn't explode, it erodes. And in 2025, that erosion is happening faster than anyone expected. Investors once obsessed with Bitcoin's price chart now scroll through AI stocks and energy plays. Gold bugs who warned about inflation now struggle to explain why the metal hasn't moved in years. The once unchallenged narrative that gold and Bitcoin were immune to economic cycles is starting to look fragile. But maybe that's the real story. Maybe neither of them was ever about price. Maybe they were about identity. Owning gold was about trusting history. Owning Bitcoin was about rejecting it. Gold meant stability. Bitcoin meant revolution. One glimmered in vaults beneath the earth. The other pulsed through digital networks in the cloud. They were opposites, yet somehow they mirrored each other. Two sides of the same human desire to escape uncertainty. And now that desire is colliding with a new reality. Governments are building digital currencies of their own. The central bank digital currency, or CBDC, promises efficiency, transparency, and control. To some, it's progress. To others, it's a nightmare. Because if a digital dollar can track every transaction, where does freedom go? Suddenly, Bitcoin doesn't look like a get-rich asset anymore. It looks like the last piece of financial privacy left in the world. And that realization is reigniting a different kind of faith, not in price, but in purpose. At the same time, gold is experiencing a quiet transformation. While the West seems bored with it, nations like China and Russia are hoarding tons of it, not as an investment, but as a weapon. In a world divided by sanctions and trade wars, gold has become geopolitical. It's not just about wealth anymore, it's about leverage. So while investors in New York and London debate charts, vaults in Shanghai and Moscow are filling up. The silent message: if the dollar falls, gold will speak. Meanwhile, Bitcoin is finding strange new allies. Not Wall Street traders, but developing nations. In places where inflation destroys lives like Argentina or Nigeria, crypto isn't speculation, it's survival. People trade it peer-to-peer, outside banks, outside borders. It's messy, unregulated, chaotic, but it works. And that's the irony. While the rich world doubts Bitcoin, the poor world is actually using it. Still, neither gold nor Bitcoin is bulletproof. Every surge is followed by panic, every crash by denial. They are reflections of us. Our greed, our fear, our endless search for something that cannot fall. But history says everything falls eventually. Think about it. Empires fall. Currencies collapse. Even the US dollar, strong as it is, has lost over 90% of its purchasing power in a century. Gold has seen empires rise and die. Bitcoin has seen fortunes made and erased in days. And yet both survive. Not because they're invincible, but because belief keeps returning again and again. Maybe that's what makes them timeless. Not the metal, not the code, but the cycle. The human cycle. We lose faith, rebuild it, lose it again. The same story. Different century, different medium. But what's coming next might be different. Artificial intelligence is rewriting economics itself. It can analyze markets, predict trends, and manage portfolios faster than any human. What happens to belief when machines start deciding value? If AI begins to control money, the old idea of safe haven might disappear completely. You won't need gold to protect wealth. Your algorithm will do it for you. You won't need Bitcoin to escape control. Your data will already be the currency. And in that future, maybe gold and Bitcoin won't collapse in price, but in relevance. They'll become relics, not of failure, but of transition. Proof that once, humanity trusted metal and math before it trusted machines. But even as technology takes over, there's one thing AI can't replicate: emotion. The feeling of holding something real. The thrill of defying the system. The comfort of knowing your wealth isn't just numbers on a screen. That's why, even as the world digitizes everything, some people will always keep a gold coin hidden somewhere, or a Bitcoin wallet no one knows about. Because deep down, humans don't just want profit. They want control, a sense that when everything else collapses, something still belongs to them. So are gold and Bitcoin collapsing? Maybe not. Maybe what's collapsing is our illusion that anything, any metal, any code, any number, can save us from the chaos we create ourselves. And maybe that's the real story of money, not a story of markets, but of faith. Not about what we own, but what we believe in. And as long as belief exists, as long as humans seek meaning in numbers and shine in metal, gold and Bitcoin will rise again. Not because they're perfect, but because we are not.